All right, welcome everybody to Legend Real Estate Trust Q&A webinar. I'm Marty Gordon. I'm the CEO and one of the founders of Legend Real Estate Trust, and this is my lovely wife, Amanda. Sorry, I just introduced you. You can reintroduce yourself to me. So the purpose of this webinar is Q&A. We've got lots of questions over the last month or so, we figured good time to clear up some of those, and we'll also have a brief Q&A period at the end for any of you guys if you have any other questions. You want to introduce yourself now?
Sure. Hello, everybody. My name is Amanda Bauk. I am also a co-founder of Legend Real Estate Trust. I'm the COO and also the investor relations manager. So Marty and I each bring 20 years experience into real estate investing. Marty by trade is a carpenter. I bring to the table a lot of property management experience, sales experience, customer service experience, and we both have a real estate coaching background as well. So enough about us. We're going to jump into a very brief overview about Legend Real Estate Trust. I know a lot of you have become familiar with our offering, but for those of you who are new to Legend, I'm just going to quickly go through who Legend is and what we can offer. So I'm just going to share a couple of very brief slides here. And don't worry, this will go very quick. Did I actually hit share screen? I think I just opened this. Can you escape for half a second? There we go. I think you have to go back to Zoom for a minute and actually hit share screen. Yeah, there we go. I just jumped to the PowerPoint.
You have to actually hit it.
Oops. Yeah, and then hit share. There we go.
Okay.
My bad. And then go presentation mode.
Here, you take it.
I'll drive. Okay, we'll try that again. I was trying to be smooth there, and I was not at all.
Now, this is just a summarized version of the
investor presentation.
The full brochure.
Yes. So anybody who really wants to take a deep dive into Legend offering, you can access the full version PDF of this, and we have a full webinar presentation where we run through it as well.
Yeah, so there's a link. You guys can download it. Many of you probably already have downloaded that, but
yeah. Okay, so welcome to Legend. So we are Legend Real Estate Investment Trust, and we are focused on acquiring and developing high quality multifamily properties in the GTA and all across Canada. So Legend, what we're offering here is a 15 to 20% targeted annual return when you decide if you want to invest into Legend. And within that is an 8% annual ROI preferred return. So this is your cash flow that would be paid quarterly. The minimum investment to participate in Legend is $10,000. And the investment vehicles that are available are RSP, TFSA, LIRA, cash, of course, and any other Canadian registered accounts. Now, for investor suitability, you must meet eligible or accredited status to participate. Now, our first property, our flagship property that we're putting into Legend Real Estate Trust is 144 Lucan Avenue in Waterloo, Ontario. Now, this is an absolutely gorgeous, fully renovated, turnkey 60-unit apartment building. And we have purchased this for a great price, and we're looking to close in June or July of this year. And this will be the first that goes into Legend. So performing right off the bat, this absolutely gorgeous apartment building. So when you're participating in Legend, you're buying into a portfolio, and you would become a partial owner of a building just like Legend, and then the other apartment buildings that we acquire in time and put into the fund. Now, exciting times for Legend. We have officially launched, and it was actually Monday, April 8th of this year that we officially launched Legend Real Estate Trust. And so far we have 38 investors who have committed and invested $1,261,540. And this is hitting about 40% to our first goal in less than a month of being live. So thank you to all of our investors who have chosen to participate in Legend. We are very excited about the launch so far, and we're very eager to continue earning your trust and to get other investors into our investment as well. So we will continue with monthly closings. April was just our first closing, and we will close monthly as long as we have an acquisition on the go. And we are actively pursuing our next purchase right now. So more to come on that when we get a little further. And of course, building effortless wealth. There's my email in case anybody wants to get in touch. And our lawyers always want us to include a disclaimer. Like all investments, this investment comes with some risk, and you just need to be aware of that. So I'm going to stop sharing my screen here and then just come back into mode. I'm going to pause and see if anybody else has joined us. And we do have a few other people. So it looks like Jose is here. Hello, welcome. And we've got Sahar here as well. Welcome.
Hi, guys.
So everybody, in case you missed it at the beginning, in today's webinar, we are focused on more of a conversation, a Q&A session. I've enabled the microphone for all of our participants in the webinar today. So if you want to freely speak and ask us a question live, you can do that. You can also use the Q&A section that's built into Zoom, or you can pop your question into the chat section as well. So we will be taking live questions for the remainder of the webinar today. Now, we do have some common questions that we have received from other investors who have already participated in Legend or were looking to participate in Legend. So Marty and I are going to go through a few of these common questions and just share what is the question and what is the answer. So Marty, I'm just going to pull this up. We're not going to do a share screen on this, but we can just have a glance at our document here. So how do you want to just jump right into it?
I'm glad the font is so small.
Oh, are you squinting? Okay. So one question that was coming up, and it was more of a technical question, and these are not necessarily prepared in any order other than in order that they came in to me, and I captured them. So one question was, I want to invest with my registered funds, but I'm only seeing an option to invest in cash. So this is coming from an investor who's already opened their Equivesto account, and they're looking to fund their transaction. So the answer is the Equivesto system is going to default to a cash investment. So you just need to let Equivesto know before you initiate the transaction. So you can simply reach out to support@equivesto.com, and they will adjust you in the system. And you can easily just let them know which registered account you want to participate, or you want to use to participate in the investment, whether it be TFSA, LIRA, RSP, etc. And also let them know if you already have an Olympia Trust account set up. So more of a technical question, but it is a common question that had come up a couple of times. Okay. Just kind of pause in between. If there's any follow-up questions, again, guys, just go ahead and throw them into the chat or the Q&A. There we go. Yes. Okay. So Sahar has an excellent question here.
Why don't we just answer that right away on the fly?
Yeah, we'll definitely do it. So how about you read out the question out loud?
Okay. So Sahar's asking, can we please speak about the minimum length of investment? So the minimum time length, I'm assuming you mean. And is there a penalty if the invested funds are requested before that time? Yes.
Yes.
Okay, so good question, Sahar. Thanks for that. That's actually come up a lot. So we've actually prepared the details on that one. So short answer is the minimum. There is no minimum. You can invest for any length of time. However, there is a penalty if you remove your funds before the 5-year period. The penalty changes or decreases every year leading up to the 5-year period. So in other words, if you sign up and then you exit before the end of year 1, the penalty is a 6% penalty. Before year 2, before the end of year 2, it's a 5%. Then the next year it's 4%, then 3%. And then in the final year, so if the 4th year, if you exit before the end of the 5th year, it's a 2% penalty. So, and then after that, once you reach 5 years, there's no penalty.
Mm-hmm. Yeah.
So it's not a huge penalty, but it's, you know, it's enough understanding like there's transactional costs to bring your funds into Legend that we would incur. So obviously we want you to stay in Legend as long as possible, for your benefit and for the benefit of the REIT. Yeah, so there is a small penalty.
Yeah, so it's common to have redemption fees, and just for clarity, it's before year 1 is 6%, and it's before year 5 is 2% on both ends there. So it's not the end of year 5, it's before year 5.
Sorry,
it's 2%. So if you make it to year 5, there's no more redemption fees after that.
Did I say the end of year 5?
You did.
I meant to say the end of year 4.
Correct. Yeah. So just for clarity on that. So excellent question. It has been one that has been commonly coming up. So thank you, Sahar, for your question. All right. I'm just checking over in the chat. Looks like we are in okay shape there. And then we're just going to go back to a couple other questions that we had coming up. So the question is, if I'm investing with registered funds, am I required to open and use an Olympia Trust account? And the answer is yes. So you can use an existing Olympia Trust account if you already have one. And if you don't have an Olympia Trust account, you will need to open one. So opening an account with Olympia is built into the Equivesto process, and they will help you along the way. And for clarity, Equivesto is our exempt market dealer, our EMD, who's partnered with Legend, and they keep, make sure that everything is compliant, and they handle all the paperwork and getting our investors into the investment. So that's built into their process. You don't need to approach Olympia on your own or do any sort of setup on your own. Okay, so we've got that handled for you with some customer service to assist. Okay. And then check the Q&A. There we go. So Daryl has a question. What happens if you do not raise enough investment funds prior to June or July or the closing of the property? So excellent question. Do you want this or should I?
Yeah, good question. Based on our funding, we don't expect that to be an issue, but in the event for any property moving forward, if we didn't close or didn't have enough funds to close on any property, depending on the situation, we would likely we would get private funding, private loans to close on that property temporary, and then pay out those private loans with equity investors as they come into to Legend. So we could raise the funds after closing. Technically, that's not ideal because we obviously don't want to incur any additional costs. And if we're taking on private loans to close on a property, then there's going to be interest, minimum interest costs on that. But while we're discussing that, I might as well. I
have more to add to that before you change topic.
Well, I'm not changing. Okay, go ahead.
Okay.
I'm not changing topics though.
Oh, okay, then carry on.
No, you go ahead. I totally lost my train of thought. It was coming to me in a second.
Okay, I just wanted to say that when we're looking at our initial fundraise of 3 million, for example, part of this $3 million raise includes some fees and contingency budget and some overage budget and some operational costs as well that are not actually due on the closing date. So when we're looking at our fundraise, we're at 40% to goal right now, which is very exciting within the first month of launching Legend. We don't actually need the full $3 million raise in order to close the Lucan property. So that's one important detail. Second to that is we have the ability to extend our closing date for the Lucan property. So one of the protections that we put into our agreements of purchase and sale is the ability to extend the closing for financing reasons specifically. So there's another situation that is kind of out of our hands that's called CMHC. And I don't think it's any secret to any experienced investors that they are a little bit slow these days to getting to files and to closing on new purchases. So we are intending to get our mortgage through CMHC. So we included a clause into our APS that if CMHC was not able to close our deal on time, that we were allowed to extend so that for a period of time that's required until CMHC gets to our file. Because again, these are sometimes things that are a little bit out of our hands when it comes to financing and lining up closing dates. And we just want to make sure that everything is protected and it can go as smoothly as possible, especially when we're operating at this scale.
Yeah, so CMHC's lackluster performance is not going to be a detriment or a cause why this property
They're
will close.
busy.
But that being said, that's only specific to this first property. You know, we were able to negotiate that into our purchase agreement, but that's not always going to be the case. So that's why if we do have scenarios in the future where, you know, you can imagine there might be a property that's a great deal, but the seller wants a real quick close, and we may not have a bunch of capital on hand, but we really want to acquire the property. So under that scenario, we'd obviously start fundraising, but we would close with private loans first. But I also do want to point out, part of our job, or more so my job, is to keep the REIT in balance. So, and what I mean by that is to never have too many properties lined up in the pipeline that we're committed to. It's always, you always want to be lining up properties, potential properties for acquisition, but you wouldn't want to commit to, like, you know, 4 or 5 properties if you're still funding the first one, because now you're getting into a situation where, well, I'm still funding the first one, and now I've got a second and a third and a fourth and a fifth, and now I'm gonna have to close privately on all of those properties, and who knows when I'm going to be able to actually fund those with equity partners. It's too much. So you're starting to really start incurring a lot more unnecessary costs just because you're taking too many properties on at once. So it's about balancing. It's okay to have, you know, firmed up on one property that you plan to close on in 6 months or 10 months, but you wouldn't want to overdo that. So that's about the balance. And at the same time, we also need to make sure that we don't have a whole bunch of investors that we don't have a property for. So we'll open up the opportunity to invest, and then we'll pause it when if we've reached a fundraising goal for a closing of a purchase. If we don't have another purchase already in the pipeline, then we're not going to just continue fundraising millions of dollars hoping to find a property. So that's what I mean about balance. Some people will just sort of take on every property because there's a lot of deals out there, and we wouldn't do that.
Yeah, so we're interested in appropriate and responsible growth for Legend. So as Marty was saying, this balance, his job is the acquisition man, and Marty is scouring the listings and offering and negotiating on properties. Well, it seems like you're doing it in your sleep often, constantly looking at the next deal.
Don't remind me of that. Sometimes I actually dream about, like, math.
Yes.
Which is not a good thing.
I think it's great because that's your job. So Marty's the acquisition man, and then I'm doing the fundraising and the investor relations. These are the primary responsibilities within our roles. So as he was explaining, just keeping both of those things in check are very important for just the overall health of Legend. So let's jump into a couple other questions that came in. So we have one from Jose. If I invest with you and I want to exit before the 5-year deadline, can I sell my investment to someone else to avoid paying the penalty? This is a question we haven't received yet. So I would imagine that this would then, you're actually signing a subscription agreement. So you're buying shares is what you're buying, units in a company. So then you would have to assign your units to another person. So I actually don't know the answer to this. I believe it could be possible, but maybe we should look into that before we give a hard answer.
Yeah, like, it's not, we would be fine with that, but there might be rules that
Make sure our legal team's okay.
Our EMD would be the one that we'll have to discuss that with.
Yeah.
Because it may be that you have to pay it out for somebody else to take on your shares. We couldn't actually, I don't know if that's a possibility. Well,
yeah, so great question. We will definitely get the answer to that. So thank you. And then Sahar, what is the exit strategy after 5 years? Refi and hold or sell? So we don't intend to be exiting properties from the portfolio, that we do want to still be in a growth phase for Legend at the 5-year mark. Our plan is not to start disposing of assets, that we do want to continue to grow. Now, like most investment trusts, we will have investors who are coming in, we will have investors who are coming out, and everybody is joining at different times. So there will always be a flow of investor dollars coming in and out. So let's imagine you, Sahar, you want to leave at your 5-year mark. It doesn't mean that we actually have to trigger a sale or a refinance of the property to exit you from the funds, that we can have another investor come in and take your place. And there's just a roll of money that would be available, that you could take your profits and sell your shares.
Sure, but we want to be clear, we wouldn't say it's that somebody else is taking your place. We just have investors coming in.
We have investors coming
And
in.
if
yes.
you were exiting, the other thing is we have cash flow, assuming at 5 years, we would surely have monthly cash flow coming in. So you can be bought out with your shares, and you can exit with the monthly cash flow. So we wouldn't necessarily even rely on new investors coming in as investors want to redeem and exit, because we would have that cash flow coming in. But yeah, so after 5 years, yeah, you can do whatever you want, even if it's 5 or 5.5 or 6 years, you can do whatever you want at that point with no penalty. And understand that leading up to that 5-year point, presumably we're going to keep acquiring properties the whole time. So there's going to be different refi dates for all of these properties. And to be honest, the 5-year point may not be the case with even this first one. We might be doing a 10-year term. So just because of the interest rates that we can potentially get on 10-year terms are a little bit better than on 5-year.
Yeah.
And
we also understand that the power of buy and hold for real estate is really important, and that we get our investors in the mindset that this is a long-term game. This is not a quick and dirty. This is not a get rich quick. That real estate needs time to mature and actually produce their actual return. So that's why we're saying, it takes about 5 years for an investment to really mature. And that's how we've built our fund, with that stability in mind. So, getting to that 5-year mark, I think, is a reasonable commitment, but we do want the flexibility that we know that life happens. If people want to move early, or if they want to keep into the funds, then that's allowed as well.
But just to wrap up on that one question about a refi, yes, we will be refinancing properties as they do come up for renewal. So if we're going to keep a property in the portfolio, it's very likely we would refinance, assuming that it makes sense to, and that there would be a significant extraction, which we could either pay out or we could use to buy another property or multiple properties.
Yeah, and one more point on that, our flagship property, 144 Lucan Avenue for Waterloo, this is a turnkey investment property. So this is not a property that is in rough condition. It's not a property that requires renovations. 100% of the units have already been renovated, and we're entering into this knowing that it's in a turnkey status. So it isn't as if we're coming in, doing a renovation, expecting to do a refinance on the property. That is not our primary strategy here. So we are looking for buildings that are already performing and are much more closer to a turnkey status is the intention for Legend Real Estate Trust.
Yeah, either brand new or recently new, like within the past 5-6 years. We're not looking at 30-40-year-old buildings that have not only outdated mechanics and building code issues, but also, like Amanda said, outdated rents that now we're going through this transitional process over 5 or 10 years, trying to get tenants to convert over into new tenants.
That's not our strategy.
Everybody's doing that. We're focusing on buildings that are already up to date, up to modern code, and up to current modern market rents.
Yeah. Okay, let's move on to our next question. We have another one from Sahar. Her question is, understanding that 8% quarterly payments are the return of the investment and not actual invested capital, when will the invested capital be returned back to the investors? And the answer to this question is upon redemption. So it's when you exit the investment is when you're cashing out, let's say, is when you would receive your return of capital.
So it's just like buying, if you think about buying a stock, it's very comparable to that. So you invest, you buy a share at, what are they, $10 a share?
Yes.
100
$10 a unit.
$10 a unit. We call them units in a real estate trust, but a unit is basically the same thing as a share. Just it's different legal terminology. But so when we say units, we're referring to shares. So if you buy in at the purchase price of $10 a unit, so let's just say you have one unit, it's worth $10. That unit is directly correlated with the total equity value of the portfolio. So in this case, it'll just be the equity that we've raised for the first property. But as the property's mortgage gets paid down, and as the property goes up in value, now there's more equity in the property. So once per year, at a minimum of once per year, possibly more, we increase the share value accordingly based on how much equity growth we've seen. So if you say we saw 10% growth in 1 year in the total equity, then it would be reasonable to increase the share value by 10%. So that's just these are rough examples. Once a year, we should be getting all of our properties appraised to see exactly what the new market value is. So that's something that we have to do with every property once per year. And that's how we determine what the new share value is. So now year two, your shares have gone up by 10%. They're now worth, what would that be? 10.
I think it was
that would be $11,
yeah.
Right? So it was worth $10 at the time of purchase. Now it's worth $11. So when you exit, you get an $11 payment for your one share.
Yeah. And in the full investor presentation, we actually walk through a real example, a case study, and show how a $10,000 investment can turn into a $20,000 return at the end of 5 years. So we do walk through and say, how have we come up with the 15 to 20% total projected ROI? And we walk through, the 8% preferred, which is the cash flow, and then the other 7 to 12% in the equity growth for the investment. So that is included step by step in the full investor presentation for everybody to have a very close look at how we've come up with these numbers.
Yeah, so it's just, remember, there's two pillars here that are generating a return for you guys. The cash flow is the one, which is quarterly payments, and then the increase in your share values, which happens once per year at a minimum.
Yeah. Okay, so we've got a couple other questions here. So another one from Jose: because it is an investment and any investment has implicit risk, is there any guaranteed return? So our EMD would tell us there's no guarantee to any return. So like all investments, there are risks that are associated. So all our investors who are coming in, again, you need to meet eligible or accredited status. There is the investor qualification process. And we would insist that all of our investors have a good understanding of the real estate that you're getting involved with. So this is why we've put together a comprehensive and educational investor presentation so that you can have a clear picture of what Legend Real Estate Investment Trust is all about, but also to have a close look at the first property, the flagship property, which is to be used as an example that we will continue to build Legend with these types of properties. So if you have an understanding of investing into buy and hold properties, multifamily properties in tier 1 markets across Canada, these are some of the fundamentals that we are building this fund on. Now, for Marty and I, we've got just about 20 years experience in investing in real estate. So we started many years ago and we built our portfolio from buy and hold and doing refinances and flipping to ourselves, etc. So, we're not doing the risky side of investing, that we are looking for more the turnkey properties, the buy and hold strategy, but there is the implicit risk that there are no guaranteed returns. So you would have to come into this with that understanding that the 15 to 20% is a projected ROI.
Yeah, understand that, you know, we're confident, we're very confident, but we're literally not allowed to guarantee, because we're regulated that way. We cannot guarantee a return. But we're definitely very confident. The returns that we've projected of 15 to 20%, those are conservative based on the total ROIs that, you know, we're looking for. When I'm looking for a property, if I run through an analysis on property and I think it can generate 15 to 20%, then it's not going to be good enough for me to bring into Legend, because there's not a surplus, right? So I'm typically looking for properties that are significantly higher than a 20% ROI. And I'll give you an example too. So like as we mentioned, we're focusing on turnkey buildings, but also newer. Well, there's a reason for that. Newer buildings, especially in Ontario specifically, buildings that are built 2018 or newer are not subject to the rent increase regulations. So not that we're just gonna like go in and jack the rent through the roof, because you know
the market is still going to dictate.
But that's the good thing, the market will dictate. So we're not handcuffed with what the government is telling us the rents need to be in our building. The market will tell us, and the market typically grows, you know, in the previous years pretty consistently much higher than what the government regulated amount was. In Ontario this year and last year was only 2.5% rent increase. And so that's the other issue you run into with these older buildings, is if you've got a bunch of tenants that have been there since, you know, 1965, and you can only increase the rent by 2.5%, you can't really do much with the building. But when we have our building is already at market rent, and then which is great to start off, but then it's not subject to the rent increase guidelines, then in the event that there is a big jump, we can increase accordingly. But I do want to say half of this building, only half of the building was built after 2018. The other half was renovated, but it existed before 2018. So only half of this new building is exempt from the rent increase regulations.
Okay, so we've got another question from Jose. So is the return we receive a net return, gross return? Would we have to pay an additional fee different from normal taxes? So there are some fees that are associated with investing, and it's more so to do with setting up your Olympia Trust account. So I'm just going to pull up my sheet so that I'm accurate about the fee and just out-of-pocket expenses. Just going to find it on my cheat sheet here so I can be accurate. Okay, there we go. So there are withdrawal of fees when you are investing from your registered account, and these can range anywhere from $200 to $400 plus tax. So this fee is going to be determined. Let's say you hold your RSP with TD. If you are withdrawing your RSP from TD, they are going to charge you a fee as per your agreement with that institution. Okay, so you can expect anywhere from $200 to $400 is kind of market fees for that. And when you're setting up your Olympia Trust account, plan for about $300 plus tax for the first year to get your Olympia Trust account set up and running. And then the cost is about $200 plus tax for each year after that. Now, keep in mind, we selected to work with Olympia Trust as our custodial account for a couple of different reasons. And one being that they're very common. How do I close this, Marty? No,
The X.
Well, shrink it is what I meant. Well, the shrink thing wasn't working to minimize.
She's never used a computer before today. So.
Your computer's not my computer. So we selected to work with Olympia Trust because they're common, and a lot of investors already have their account set up with Olympia Trust. Now, if you're new to working with Olympia Trust, there are other investments that you can often use your Olympia Trust account and go and participate in. For example, if there's another fund or another investment similar to Legend, and they're also working with Olympia, you don't need a new account, that you can use your existing account so that it isn't just exclusive to working with Legend.
I just want to add something too, based on that question. And then I see Sahar's got another question too, so we'll get to that. But understand too, when we talk about risk, just to reiterate about that, you know, when we have an 8% cash flow and we expect to be hitting that within the first 12 months, well, year two, we're not gonna like just not increase the rent, right? We're gonna continue optimizing the building for the entire duration that we have this trust, right? So, you know, if we at the end of year one, we've hit a level of say 10% cash flow instead of 8%. Some of you guys probably watched our previous presentation, but just in case you didn't, now we've got a surplus. Okay, so the surplus, again, that's not like just all, we take all of that. That is then split between us and the investor. So you get your 8% preferred, meaning you get 8% before we take any of the cash flow. But when there's a surplus, you still get, there's potential to get more than 8%, and that potential becomes even greater each consecutive year. So if you stay in for 6, 7, 8 years, I mean, it'd be pretty hard to imagine a scenario where you're still only at 8%, right? We expect to hit 8% the first year. So that's the only reason I just sort of want to inject that too, is pertaining to the
risk question.
With the risk and the question about Olympia Trust, or the answer you have about Olympia Trust, when you have like a $300 flat fee to start up your account, that might seem like, you know, fairly expensive, or maybe it doesn't, but you know, the longer you stay in, the more you're offsetting that, because you've paid this $300 fee and your cash flow is increasing, you know, significantly each year.
Yeah, again, the power of buy and hold. Okay, I hope that answered your question. And the next question from Sahar. Sorry for too many questions. No, Sahar, this is a Q&A session, so we are glad that you're giving us questions so that we're that's the point of our video.
We're always worried that there aren't going to be enough questions, so
yes,
we very much appreciate the questions.
The participation, and it lets us know that investors and potential investors are actually reading through the materials and trying to gain a deep understanding of the investment. So these are great questions. Keep them coming. So let's get to the next one. So I understand that there is a DRIP option, and was mentioned that there will be a discounted price if someone doesn't take the 8% and DRIP it instead. What would be that price? So Marty, why don't you explain the DRIP program a little bit more clearly?
Yeah, so DRIP is the dividend reinvested program. So for this, it usually applies to people that are investing with RSPs. I mean, anybody can use this program, but what this means is,
if you don't want the cash flow,
when we go to pay out cash flow, if you say, look, I don't want the cash flow, just reinvest it. Okay, so we keep your funds in Legend, we don't pay it out. Well, that's additional funds that's coming into Legend that we don't have to transact through our EMD. So you can, we would then give you we would pass the discount on to you, that we are now saving the fee from our EMD fee, so we don't have to transact it. And so there's a discount to buy shares with your DRIP, with the DRIP program. So if you have your cash flow, you don't want it, you say, well, I just want to use the DRIP program for my cash flow, so it just stays in the REIT and we buy you more shares rather than paying it out. So it's perfect for people with the RSPs, because most people with RSPs are not collecting their funds anyways. They're saving for retirement, so they're not going to want their cash flow paid out, presumably. And many people that are cash investors may also want to take advantage of that.
But the choice is the investor. So you can choose if you want to receive your preferred return, or if you want to participate in the DRIP, and you have the ability to change your mind as well. So again, we've built this fund with flexibility. So initially, if you say, no, I do not want to participate in the DRIP, but I want to receive my preferred return to get started, that's fine. If you change your mind and then you do want to participate, then you can let us know that and we'll make the adjustment.
Don't keep switching back and forth.
Well, I mean,
don't like alternate from one month to the next. You can.
Well,
but
Marty, I
mean,
just said that investors could do that.
I
so-
know, but obviously, like, you can change your mind, obviously.
Yes, you can change your mind.
So what is the discount? Is it 1.5%? Is it?
I don't have that one. I don't have the specific price. Sahar, we will get back to you on what is the actual price. What is the discounted rate?
It's something like 1.5%. It's around there.
Yeah, I think that's the range. So we've got 2 questions, to follow up on to make sure that we get answers, which is great. We're building our Q&A doc even more robustly. So I'm going to leave that there. I'm not going to close it just so we can go back to it. Okay, so I'm checking over into the chat, and our chat is a little empty.
Yeah, it's empty.
Somebody's using the Q&A section, which is fantastic. So Marty, let's pop over into our document and see if there's other questions that we can just bring up and see. Okay, so I went through this one. Another question that we had was, I want to invest some cash and some registered funds. Is this allowed? And the answer is yes, absolutely. We've had a few investors actually say that they wanted to pull from different accounts. And yes, you can do this. You just need to let Equivesto know. So again, that's our EMD, and they will support you through both of these transactions. It will actually count as 2 separate transactions, but they will walk you through that entire process. And next question, which kind of goes hand in hand, is if you and a spouse both want to invest, do you each need an account on Equivesto? And the answer is yes, you would both need to open an account on Equivesto. Now, there's no fee to sign up on Equivesto. Your Equivesto account is free. But again, because they're separate transactions and the investment would be coming from different accounts, you need to have a separate account so that, again, reporting and paperwork is done nice and clean.
If my funds aren't available yet, can I invest later into Legend? Absolutely. So Legend's an evergreen fund. So as we kind of already explained earlier, it's continually growing. We don't have any plans to stop acquiring additional properties.
Mm-hmm.
Obviously, if there's a point that we reach, as I mentioned, where, there's nothing available, like just, I don't see that happening, but imagine that there's nothing available for like 2 years. Well, we're not going to keep fundraising at that point. We would pause fundraising. But I don't foresee that happening. We expect probably to acquire a minimum of 2, probably 2 to around the range of 2 to 4 properties per year. So, again, that's where my job comes in, to keep things balanced. I should be finding properties that fit our criteria. And so if I'm doing my job, as long as the market's cooperating, then yes, there's always going to be opportunity to invest. But I will say, understand that as we build that share value, that purchase price for each share or unit is increasing, so that it doesn't just increase for your redemption, it increases for new purchases as well. So anybody that wants to come in, if we've already adjusted the share value to a higher price, then they have to buy in at that new higher price.
Okay, great explanation, Marty. So, and Jelly, I hope I'm saying that properly. I see that you've got your hand up here. So I'm just going to, I just enabled your microphone there. So if you want to unmute yourself and ask your question, please go right ahead.
Sorry, the raise of hand was a mistake. I'm so sorry. So sorry.
No problem. No problem. I was really excited. I was like, oh my gosh, you're jumping right in. Okay. Did you have a question while we've got you on a hot microphone?
Actually, my question has nothing to do with money. It's just, are we going to be able to receive the recording of this? Because I missed part of it and I find it quite interesting. So, yeah.
Yes, absolutely. Yep. So we're recording it right now and we're going to send it out to everybody. So you will all have access to this recording, and you've got access to previous webinar recordings as well. So we'll make sure that you know where to find those on YouTube. We've got those available for you.
Perfect. Thank you very much.
You're welcome. Thank you. How do I go back? There we go. Okay, perfect. And then Daryl, he has a question here. So just to clarify, we can combine an RSP and a TFSA, for example, to equal the 10K minimum, or will each registered fund need to have 10K? So
TFSA is a minimum of 10K itself, isn't it?
right,
Yeah.
so some of the accounts do have some specific requirements, so it depends on which accounts you're pulling from. So for your individual situation, Daryl, what I would encourage you to do is first reach out to me by email, amanda@legendinvestments.ca, and we can look into your individual situation. I would connect you to our team at Equivesto, and they would go through the suitability and let you know investing criteria, and they'll also let you know what are your investment maximums, and then go through these nitty-gritty details of if you're pulling from two different accounts, you know, are you able to make up that $10,000 minimum?
Yeah, I think it depends on the account.
Yeah.
So some TFSAs definitely do have a minimum 10K investment amount
To transact, yeah.
to transact.
Yeah, but you could also, yeah, exactly. So it depends on the specific. But there are circumstances where you can combine accounts to achieve that $10,000 minimum. Great question. Okay, how are we doing for questions? I think we're still doing pretty good here. Okay, so let's jump back into our doc. The next question here is, where can I review the offering memorandum, or the OM? So our answer is the OM, our declaration of trust, the subscription agreements, and a comprehensive appraisal report for 144 Lucan Avenue are all available for your review on the Equivesto portal. So your first step, if you're interested to invest into Legend, is to sign up for a free account on Equivesto. Then you'll have a login and you can access all of these documents. You will absolutely have the opportunity to review all of them before you actually commit to investing. If you're having any trouble with these steps, reach out to me directly. Myself, Amanda at legendinvestments.ca. You can also reach Marty at legendinvestments.ca, and we will help you through the process and make sure that you have access to any of these documents or any information that you're looking to review if you are considering participating. Okay, let's grab a few more of these questions so that we've got them. So we went through the redemption fees. Next question is, can we add a beneficiary or a successor? And the answer is potentially. Your estate planning needs to be completed on your end as an investor. So including your investment with Legend Real Estate Trust in your will and testament, it is advised, but you would need to work with your own estate planning team to include your investment. Okay, Marty, you want to grab this one?
How often will Legend report to investors? So we'll be doing quarterly reporting.
Yep.
Pretty straightforward answer there. I wish there was more.
And I set you up for that. I was like, take this question as if it was more robust. And in addition to quarterly reporting, if you guys haven't already, you can join our free Facebook group, Legend Inner Circle. So this is where we will provide, you know, more fun updates, more casual updates, but the detailed investor reporting will come out quarterly. You can reach out to us anytime by email as well. We are accessible, we are available. And if there are other exciting updates, then we'll send them out by email for anything that's relevant, or like I said, in our Facebook group.
I understand there's no guarantee of returns. Is the maximum 20% annual ROI, or could it be higher? Yes, it absolutely could be higher. There is no maximum 20%. Again, these are just projections. So obviously, if the market goes crazy again, you know, and we get significant increase in value to our portfolio, which we would be discovering when we're getting those annual appraisals done on each individual building, then it's incumbent on us to increase the share value accordingly. So this is you know, pretty tightly tracked. So it's not like there's not really any way that you know, there would be value added to the portfolio that, you know, you guys are the owners of the shares, right? So you guys are going to be the ones to realize that equity growth.
And then Sahar, I see your other question here, which is great. Is the structure LPGP? And the answer is yes. So we do have GPLP structure that are underneath the overall trust, the MFT. So in the investor presentation, we do show an organization chart so that you can understand the flow of funds and what our legal structure looks like. So we've got, Legend Real Estate Trust at the top, that is the MFT. And then we have a master GP and we have a master LP as well. And then we've got our property holdings underneath. So yes, LP GP structure is the answer. And then we've got another common question is, if you reside in Quebec, are you able to still invest into Legend even with registered funds? And the answer is yes. Canadians from all across the country can invest if they meet eligible or accredited status. However, the OM is only provided in English. So if you are a resident of Quebec, we do not have a French version that's available. You'd want to make sure that you're comfortable with understanding the English version. And can you share this opportunity with friends and family? I would say, heck yes, you absolutely can. So if you do know anybody who wants to come into Legend, please, by all means, you can connect them with us directly. Marty and I are also available for one-on-one Zoom calls. So if you want to, meet with us and speak with us more in detail about Legend's offering, you can, especially somebody maybe that you're referring to Legend who may not be as familiar with us or Legend or real estate in general. You can go ahead and connect them to us directly, and we're more than happy to, again, support and make sure that we can educate. The heavy lifting will not fall back on you. Just let us know and we can help them through the process.
Okay, I think we answered
Marty,
this.
you got the final question.
When can I expect to see my projected 8% preferred annual return? Yeah, so we expect within the first year, probably towards the end of the first 12 months. Again, we're taking properties in that are already performing, and so there's not some huge renovation to go through. We're not doing any new builds, so there's not some big process of approvals and inspections and anything like that that we're waiting on. It's literally just a matter of increasing the rent on the existing tenants. So yeah, so that's the plan. Of course, we don't have our mortgage in place yet. We don't know exactly what is our interest rate going to be on our mortgage. There's those sorts of things that we can't give any exact numbers on.
And for clarity, the reason why we don't have our mortgage in place, in case somebody is not experienced with commercial financing, is that the lenders will not give you a rate until much closer to your closing date. So it isn't as if we haven't got our file together. Our mortgage application file is in great shape. We're looking good for the MLI Select program with CMHC.
Yeah, we're
as well.
approved.
We're in great shape for our mortgage financing. So they're going to lock in our rate much closer to our actual closing date. And it's usually within a couple of days of closing. So we won't know exactly what our mortgage payment is until much closer. We have reasonable ranges and reasonable guesses that we've been able to run our projections at. But that's what Marty means by that.
It's because commercial mortgages don't allow variable. They only allow fixed interest rates, and fixed interest rates are directly tied to bond yields. They're not tied to what the Bank of Canada's interest rates are. They're tied to bond yields, which are indirectly affected by that, but bond yields fluctuate daily. So today's bond yield could be different by 5 o'clock from what it was at 9 o'clock this morning. So that's why typically when you're going to sign for your commercial mortgage, they literally give you
it's a couple hours. I've had to pull over before and log in.
The last time they gave us 15 minutes to
Yeah.
sign it, except
It's a couple
or
of
we
minutes
would
window.
we could potentially lose the interest rate because it was based on what the posted bond yield was.
It almost feels like pulling a slot
So-
machine arm that this is where it's at for this exact moment in time, and then you lock in. And
So we can make projections about where we expect our interest rate to land roughly,
Yeah.
but we don't have that 100%.
And then Joe Macri has one more question here. So this will be the final question for today. So Marty, why don't you go ahead and grab this one, and then we'll close out today's session.
Joe says, could I please get some clarity on the 5-year preferred minimum stay? Example, if I keep adding to my investment every year, will the minimum annual requirement be 10K? And will these annual investments have a 5-year minimum stay to avoid penalties? Or can I walk away at 5-year with all my fund, including what I was invested in the additional years? So, okay, so you're talking about adding external funds in as opposed to you're not talking about the drip. If it's a drip payment, then yes, you can, there's no restarting of the 5 years every time your drip is reinvested. Now, that's a good question.
No, so it's a great question. So let's take this one away with our EMD. I wonder, or I sort of suspect that if it's a different account, if it's coming from a different account, then it might be new subscription paperwork. And then I would imagine that they have different starting times, but that may not be true because if it's the same investor, I don't know. So let us take that one away so that we can answer with clarity. Okay.
Yeah.
It's a good question. It's a good question because a few investors have asked about topping up their investment or adding to their investment in time, you know, when other things are coming due or other payouts are coming due as they're expecting into the future.
I would, yeah, okay. I don't want to answer that without, but I would think the answer is no, there's no penalty for that. It's from the point you first join on, but let us.
Same account, yeah. So yeah, let us take that away and we'll make sure that we get you that answer with accuracy. Okay. All right. So everybody, it is 2:01. Ooh, we're 1 minute over time, but we do want to say thank you to everybody who participated live. Thank you to everybody who is going to watch this webinar in the future. This is recorded and it will be sent out to everybody. So we wish you a wonderful rest of your day.
Thanks, guys.
Take care. Bye.
See you on the next one.